Yo, yo, yo. Yo. Oh, dude. Long time no see. What are you doing, man? Shit, bro. It's been like a week. How's the family? I'm just kidding. What up? Yo, if you don't follow me on Twitter, make sure you do that. I've been still tweeting and stuff like that, but I did delete like every social media app. And I've been like just staying away from my screen and stuff like that, trying to spend some time with the family. I have an opportunity coming up here. That's probably going to be taking up a lot of my time. So I wanted to spend time with my kids and stuff like that. I'm not like leaving or anything like that. I'm still gonna do what I'm doing here, but I just have this opportunity that's kind of knocking, and I know that it's coming right around the corner. So I wanted to make sure that I spent time with my family before I did that. But anyway, let's talk about AMC, huh? What do you say? It's been a while. It's been a while. AMC rough day to day. Currently trading at $13.60 in the post market, closed at $13.56. But I do want to talk about some of the things here that I'm looking for from a technical perspective, and some of the expectations that I have about AMC as well as the broader market and how those two things impact each other. But first off, there is a weekly potential bullish divergence that's occurring on the RSI. This is also showing on the daily chart here. So basically, whenever the oscillator is showing higher lows while the price is showing lower lows, it is regarded as bullish divergence, and that's what you have here. So that is a good reversal signal going towards the reversal narrative, or the reversal possibility that is occurring with AMC that we've been following for some time now. I know you're watching. You're like, feels like an eternity, brother. We've been talking about reversal for a long time, brother. I'm aware. But yeah, so I just wanted to talk about that bullish divergence while I draw this wedge right quick. Again, obviously this is the wedge that we've been following for some time now. Let's see. The best way to draw it would be if we drew it like this. Yes. 2 touches here. Actually, you have like almost 4 touches on the top, and then you have probably starting to look like perhaps a 4th touch on the bottom that could be occurring here soon. But let's get into it. So this is the following wedge that we've been following. I do think that this is still a valid pattern. I haven't seen anything that's really going to invalidate this thus far. But you definitely want to at least be staying within this to remain bullish, as if you're going to get a reversal, that sort of narrative. Because breaking below here and then like retesting and failing to create a higher low would be pretty bearish, if I'm being honest. But this wedge, just for full clarity, right? Like you're not in this like super bullish range until you break out and then perhaps even retest it and then create a higher high, right? So the reverse is also true from a, like, if you want to get hyper bullish, that's not really happening until you create higher highs and higher lows outside of this wedge. From the perspective of, we're going to climb back into the 30s, 40s, and so on and so forth, right? You have to see a break out of this wedge, and that can happen in a lot of different ways. You could actually fail here, and you could continue, right? Continue to consolidate inside of this wedge, and that can happen a bunch of times, right? So I know that people are going to be in the comments like, he's FUD, he's spreading FUD. I like when people say he is FUD, like a noun, I guess, anyway. What I will say is something that I was watching today after I saw the kind of, market open, and then AMC obviously dumps right out of open. You create this lower low. Sorry, my cat is attacking me right now. on this 1340 that we were watching, right, as the established low, you create this lower low, but then we were looking for the daily close above that 1340 level, which you did get. So I will say that that is a pretty optimistic sign that, and especially if you combine it with that RSI bullish divergence that I showed earlier, that you could see at least a short-term relief rally where you retest the top of this wedge. Now, if what you want to see is a retest and then a break of the top of the wedge, and then perhaps a retest of the top of it, and then a new high. If you do that, that's what that reversal would look like, right? That's when what starts happening is we start saying, okay, well, you create that new high. You really want to see it get above this like $20 level. Once that happens, though, you have a pretty clear shot here at this like 2750-ish range, in my opinion, right? And then that's kind of how you're gonna measure, like, okay, this is okay. So 2750. If you do the same thing, right? You go up. Perhaps it would look something like this. You go up above 2750, retest there, and then create a new high again. Then what you're saying is, okay, well, you probably could come up and test this $40 range. Most likely, this is a key level that got traded upon. You're gonna want to come up and test this, and so on and so forth, right? That's what a reversal is made of, right? But I'm not saying that that's happening immediately necessarily. We have to see that break of that wedge first. And then we can start to play upside levels. That's what as far as like what to expect, right? Now, as far as like parabolic moves and everything like that, like if you have another explosion like AMC has had in the past, and I mean, even if you don't have whatever, like the thing that you're going to be watching is these trend-based Fibonacci levels, right? So if this is the ultimate bottom, and look, you can see the correlation, right? Like this. I mean, that's honestly kind of crazy, but you can see the correlation here of what I just did, what I just drew there, right? Is he a wizard? You break up here, boom, 2930 was the key level that we talked about before. You break up here, 3950. Then the next one, 4770. And the next one, you get up to your golden pocket, right? $56. You can see these are all very key trading levels, right? I mean, this is like obviously super key, right? Obviously rejected off of this. Right? So these are the kind of levels that you'll be watching. Now, if the low changes, right? If you go even lower, you go down to here, it slightly changes these levels, but still they're relatively the same, right? So and then so on and so forth as far as the extension goes. Once you break the new high of $73, then you get into those higher ranges that we've talked about many times on the channel before. I'm not really going to get into that because I don't think it's really relevant to the conversation right now, in my opinion. What you need to be watching is, again, we've talked about over and over again how this $12 to $14.50-ish kind of range, you have to hold this $12 level, right? And to be honest with you, this really looks like you want to come down and test that at this point, right? Now that you've broken here, I will say that, right? Like, it does look like you want to do something like this if you are going to see that eventual reversal outside of this falling wedge. If you don't see that, right, you could totally see you get rejected here and then get sent down further into the wedge. And as I have the wedge drawn here, right, the apex of it is like $8, which I will say is also a key Fibonacci level. I believe it's a 786. Oh, $9.30 is the 786 for this recent move from the buy button bottom to the top of the $72 move in June. So, like, these are all realistic things that can occur with the stock. Oh, it can go up or down. Yeah, dude. Yeah, I'm analyzing the chart. All right. I'm just kidding, dude. It doesn't really trigger me like that. I don't really care about that. But I mean, it is stupid when people comment that. It's like, I mean, I'm not a fortune teller, I'm just analyzing a chart. Like, I don't know. I don't know what you wanted to say, dude. So going into the broader market, like what I'm expecting, and obviously we've said time and time again how important the broader market and what the broader market does, how it impacts AMC, right? I drew this chart a few days ago. March 9th is when I drew it. So 5 days ago. And basically, this is just a macro falling wedge. Also, by the way, this downtrend has been incredibly reliable for us. I just accidentally painted the bottom here, like Microsoft Paint style. Let me take a sip of my iced coffee. Hold on. Delicious. Brown sugar, dude. So good. So anyway, you have here your primary downtrend. You had a bull trap here, but other than that, it's been very respectful. Another bull trap here, very respectful of the downtrend. And then your primary falling wedge support down here, which has been just the wicks down. It's targeting here. You can see it kind of wedged down here as well as a support. And then I have a secondary support here, right? So this has been like the smaller wicks, like not the big major wicks down, but you've still had pretty major moves down here and tested this part. So I will expect that there is support at these levels. And you also have the short-term uptrend here in green, right? Oh, the numbers are small. Were they big on AMC? They were big on AMC. Whew. Dude, I tried, all right? I tried to make them big for you guys. I don't know how I feel about that sentence. So anyway, yeah, and look, I drew this back on the 9th, like I said. We pretty much followed it. Look, I could have easily gotten away with like, okay, like like, dude, it pretty much did it, right? Like, you could just do this, right? But I was like, nah, I'm gonna leave it, dude. So, whatever, close enough. You get the idea. I do expect you to, in the short term on SPX and SPY for that matter, at least find support here and then probably see some sort of weak move to the upside. And what that means for SPY, because I know that SPY is much more popular, especially for you guys to be trading on a day-to-day basis, obviously in America. Most people who are trading options and stuff like that are trading it on SPY. Most people aren't trading futures like that. But anyway, the translation for that. Sorry, it's kind of wonky on the SPY chart because it's got like the ended hours and stuff, whatever. But yeah, so you should be seeing a little bit of relief here for SPY, in my opinion. So you see like a move up here, and then, but I do still think that you're getting rejected. I haven't seen anything that's like signaling to me that you're gonna get this big reversal out of SPY. I don't think that you're gonna get out of this this falling wedge. I think you continue to the downside. And then I do think that, you know, it is pretty realistic to not really see that reversal occur until June. June-ish is kind of what I'm targeting. When it comes to this, maybe earlier, maybe later, but just kind of in the summer is when I'm going to start to look for you to start to create more and more higher highs, higher lows, and then from there we'll kind of read it. But that's kind of my macro view. What I think is going to happen in S&P 500. Obviously, look, this could go down here, probably will, or it could go down here, probably will. But I do expect this wedge to mostly hold. Yeah, I mean, similarly, look, guys, AMC needs the S&P 500, in my opinion. Okay, if AMC does break out of this wedge and then hold it as support and then make higher highs like that while S&P isn't doing that and is continuing to consolidate down here, then I will say, okay, yeah, like we can be bullish on AMC and not bullish on S&P 500. But I do not subscribe to that narrative so far. If anything, the S&P 500, when it goes up, AMC still has red days, right? And you've heard creators say that over and over again, right? I know Tyler used to say that all the time. So that negative beta slash margin call, whatever narrative, that sort of narrative that I've seen spread, that is not real until you break here and then you create new highs. And people will say, technical analysis doesn't matter. But I guarantee you, dude, if that plays out, it will play out like this on a chart. It will play out in a very technical matter. So, look, you can believe what you want to believe. You can trust who you want to trust. You can do whatever. But I think here on this channel, we have been the most consistent, the most conservative, most measured in our approach to this thus far, and we haven't been scared to call for further downside. We haven't been scared to call for upside. I call it how I see it. I don't try and feed myself or you guys confirmation bias on this play. We remain consistent, we remain solid, and we look at it objectively. All of those narratives, look, that's what I'm saying. Like, those narratives, those like fundamental narratives, that's why I don't pay attention to fundamentals, right? I make my fundamental decision to get into a play, and then that is my fundamental decision. Until that changes, I do not care about fundamentals. All I care about is technicals, because technicals are reality, man. Like, technicals build in the fundamentals, man. I'm telling you. So if your play, if your stock, if your crypto, whatever, is gonna blow up, it's gonna blow up as a result of a technical breakout. It's not just gonna break out of this. That is never gonna happen. It's not just gonna break out of this, okay, and just do this. That's not gonna happen. What it's gonna do is, if it did that tomorrow, it would do this. Boom. It would retest its levels. Boom. Boom. In this sort of manner. You know why? Because technicals and liquidity matter, right? That's what occurred back here. A lesson in technical analysis. That's what occurred back here, right? What did you do? Did you just rock it? Yeah, sure, it looks like that if you zoom out on the weekly or the daily chart. But no, what did you do? You broke out, came back, tested this level, came back, tested this level, and then within this breakout, even, right? You're testing key levels. You're testing Fibonacci's. You didn't just go straight up. You never do. You never do that. Just not real, right? So that, I mean, I'm just saying, guys, like that, if you MOAS, $100,000 a share, whatever, all those narratives, right? It's going to be technical, whatever it is that happens with this thing. And I do still believe in upside. I do. But I'm also not afraid of downside, right? We are the ones that are not afraid to say that we see downside coming, right? And I know a lot of apes will say, oh, buy and hold. I don't care if it goes to zero, whatever. Creators aren't saying that, right? I'm not trying to like pat myself on the back here or whatever, but like what I'm telling you, and there are a few that will call for further downside, everything like that. But what I'm saying, and I'm not trying to be critical of any creators or call it division, don't call it division. But what I am saying is all that moon boy talk really does kind of get limited by these charts for some reason, right? That's the only way, man. It's the only way that you can have a breakout is a technical one. Because institutions always win, guys. That's the reality in this market, in the market that we exist in today. Now, whether that's moral or immoral, or should it be legal or illegal, whatever, that's a totally different subject. And I think that we could have an interesting conversation surrounding that, but that's not this video. But the reality today is, right, that institutions will cause selling pressure at key levels, drive the price down, see what kind of support they can get from other institutions as well as retail before they allow for markup, and vice versa for down. Right, that is the reality. Everything is technical, in my opinion. Not financial advice. Do whatever you want. Buy Mullen or something if that's what you want to do, but that's not my suggestion. I don't know. Let's look at Mullen. Let's see what happened. It really just like didn't do anything today, did it? It just like gapped up and then just traded sideways. Wonder what's gonna happen next. Anyway, hopefully you enjoyed the video. Glad to be back. It was a pleasure talking to you guys. Again, make sure you follow me on Twitter. Discord is in the description down below. Completely free to join. There is no paid version of the Discord. You want me to join your Discord? He started it, dude. I've seen people be mad that I have a Discord, even though it's free. So I think that those people might just not even fundamentally understand what Discord is. I guess that's possible, but like, what the fuck? Like, people want to talk about what I talk about. I'm the only one who like really focuses on technicals in the way that I do. So whatever. What else? Follow me on Twitter. That's free as well. Discord, free. What else? What else is there? There's something else that I say. Oh yeah, you liked the video if you liked it. Dislike it if you disliked it. Comment your thoughts down below. Let me know what you think. Yeah. Other than that, I hope you have a good rest of your day. Oh, dude, you know, look, if you're too far into this play, like, and like you feel like you're taking an L, and I'm sitting here saying, look, there's more possible downside. This is like what I've said since fucking $50. So, and I got called a shill the entire fucking time. I mean, the entire time. The entire time. My friends called me shills at some point. Like, you know what I'm saying? Like, I had people like, anyway, I have discords that talk about me all the time, saying that I am the one. He's always calling for more downside. Well, look, a new low today. All right, you have to face reality. Anyway, if you're in a position where maybe you've been watching Uncle Lou, and he has told you it doesn't matter, it doesn't matter what happens, just hold no matter what, and it's gonna happen or whatever, and you're feeling like you're underwater, what I'll tell you is, look, I've been in that position before. Okay, from here, I'm talking to you, if that's you, if the description I gave you matches. I'm talking to you. You have what it takes, because you are interested in a stock play. You have what it takes to dig yourself out of this and succeed in this market. Okay, there is no get rich quick. There is no happens overnight. Yada yada. Only the big boys have that ability to create a ton of money in a short period of time. But if you want to learn things and you find practical skills that you can apply in this market, that you see work, and you paper trade and you teach yourself how to do things in this market, in any market, you can succeed. Your interest in this that's gotten you to this point is a signal that you have what it takes to succeed. You can either use that energy to complain about corruption and get mad about things and be angsty or whatever, or you can use that drive that you have inside of you to apply yourself, follow people who will teach you the things that you find useful in the market, and give you the tools to succeed, because people will succeed in this market. Individuals succeed in this market. Not a lot, especially day trading. But if you find ways to find long-term positions, right? Longer term, 3 to 5 year positions, and you spend your time getting those, especially when the broader market is consolidating in this way. It's not going to happen forever, in my opinion. Not financial advice. There are opportunities there, right? Buying here, in my opinion, is going to be a huge opportunity. Even buying where we are now eventually will be a great opportunity, right? It's just having that intuition and the ability to see around the corner and see where the economy in the world is going, and use technicals as a tool to confirm that conviction that you get, right? That is how you win in the market, in my opinion. Not financial advice, just the way that I've done it. Yeah, so that's kind of how I see it. Oh, one more thing I want to point out. Look, this is a special for you if you've stayed to the end of the video. A little candy, a little treat, and maybe this will become part of my new narrative, just depending on how this plays out over the course. So why did they add this moving average on the RSI? Is this really useful? Do people actually use this? Sorry. Yeah, so on the daily chart, you actually do have a sign of a glimmer of hope, at least in the short term. What am I trying to do? Oh yeah, take the wicks off. You do have a bullish divergence that maybe we'll start to put out there a little bit. Now, this can still see more downside like this. Like you could see it kind of come back down a little bit further. But as long as your oscillator creates higher lows, while your price creates lower lows, this is actually a bullish divergence, and the expectation would be that you do see a short-term reversal. So we'll watch this. We'll pay attention to how it plays out. It is starting to develop on the weekly chart as well, but you do have to see that swing up on price before you can confirm the RSI divergence reversal. So that's just something to look out for. Hopefully you enjoyed the video. If not, then that's fine too. Have a good rest of your day. I hope the best for everybody. And until next time, peace. Wish you would step back. You've been living there. If you do not want to see me again, I would understand. Dislike the video if you do not want to see me again. Peace.